Hello and welcome everyone. This is Professor Siddharth Surana, Chartered Accountant. Let me begin by introducing myself. I have been teaching since the last 11 years. Approximately 25,000 Chartered Accountants in the country have been my students. In the field of teaching, the following are the things which I have been the first person to start, and then of course others have followed. For example, I was the first person who started the concept called recorded class way back in 2013. Pen drive, Google Drive, all those things which people are doing these days. We started this way back in 2013, we at Coppergate Education. I was the first person in the country who took an online live lecture way back in 2017 when there was nothing called Corona or COVID. 2017, Facebook Live. There was no YouTube Live also at that time. I was the first faculty in the country who took lectures in two languages, English, Hindi-English mix for North Indian students and English for South Indian students. I made a book of 1800 MCQs in CA Final Direct Tax, and of course students don't know how to get answers. In the suggested answers they only have the option A, B, C, D, but the solutions, I recorded all the solutions and 1800 MCQs. Last year it was 1650, this year it will be 1800 MCQs, and they will be recorded and uploaded in the form of MCQ season 3 on our YouTube channel. And now I am here to cover with you the crash course of CA Final Direct Tax, the crash course which will be applicable for May and November 2022 exams. May and November 2022, that means we are going to cover previous year 21-22 and all the amendments of assessment year 22-23. This is what I am here to cover with, and after introducing myself, let me just briefly explain to you the difference between the full course which has been recorded and is available long ago and the crash course which is being recorded latest, fresh right now. In the full course, we have got 43 chapters, and because we cover everything in detail, the total duration comes to approximately 200 hours. It can be 5-10% plus minus, but approximately 200 hours is the duration of the full course, whereas in the crash course we are going to do exactly half duration, that is approximately 100 hours. We want to cover for those students who have got less time, less office leave and still want to cover the full syllabus. The crash course is ideally meant for them. In the full course, as I told you, I give two language options, Hindi English mix as well as English. I am the one who started it, and then other people have started following. But in the crash course we will be doing only the English language lectures, because the exams have to be given in English. You have to study in English, write in English, learn in English, give your interviews in English, post qualification, make your Word, Excel or whatever type of work, whether finance or management or wherever you go, you need to use the English language irrespective of whether you are from north or south, and therefore the crash course will be only in English. In the full course we cover more than 400 questions, that is once again just like the MCQs, 1800 is highest in my subject, highest in the industry. Likewise, the questions that I cover in the full course is approximately 400 questions in class while solving the course, but in the crash course, because we want to keep the duration less, our main focus is going to be on learning the theory. The question answers will not be covered in the crash course. However, for those students who wish to save their time because they want to do the crash course, time and money both of course, and still want to cover the questions, the good news is that we have got a question answer course that can be separately purchased. So these 400 questions which we solve in the full course, these recordings are separately cut from the full course lectures, and those recordings of question answers can be separately purchased by those students who are opting for the crash course. So you can go for an option called crash without questions or crash with questions. Crash course will be these recordings, and the questions recorded in this course will be copied and given to you. So you will have the full theory in a lesser duration and less fees, and at the same time you will have all the question answers if you go for this. So that is the option for doing question answer if you want to do extra. As far as the study material is concerned, I have got a set of 4 books, once again highest in the industry. We have a main theory textbook which covers everything in total detail, complete detail, all the theory. I have the question answer book which is used for these 400 questions. The question answer book separate. There is a question book of 400 subjective questions, both practical sums, theory questions. That's a question answer book. A third book is MCQ book, which covers these 1800 MCQs, which anyways, whether you purchase full course, crash course, or you don't purchase anything, the MCQ season will be recorded and uploaded on YouTube. So that is the MCQ book. And fourth, I have got a handwritten colored book with a lot of recent memes of recent web series, recent movies, things which are popular on social media are covered in the form of memes in that handwritten book. Exemption 2.0. I have the record of highest number of exemptions, attempt after attempt, more than anybody else. And because other people are not able to match the number of exemptions that my students produce, they generally resort to marketing like my students got so many ranks and I am rank holder and all. But I wonder whether somebody teaching one subject should take or get credit of the rank. The credit belongs to the student, but let's not get into that. These 4 books are given to all the students who purchase the full course. The full set is given to students of the full course. But if you want to go for crash course, then like you are purchasing this question answer course, you can also purchase the books. You have the option of buying all the set of 4 books, or you can buy any of the individual book. While I strongly recommend that the handwritten colored book Exemption 2.0, if you are taking the crash course, you make sure that you have the handwritten colored book Exemption 2.0, primarily because a lot of chapters where I will not be doing in detail and doing from the PDF, I will be using the PDF of the handwritten book. So that PDF which I do in the crash course should also be available in the form of a hard copy with you, which is the reason why you should be having the Exemption 2.0 handwritten book, at least even if you don't have the other books. So the options to purchase the crash course are only crash, crash with question answer, crash with books, or crash with question answer and with books. That also different validity periods of 3 months, 6 months, 1 year, different views, 1.1 view, 1.5 views, various things are available. You can contact our admin team for all the details. They will be providing that to you. So the question answers can be separately taken and the books can be separately taken. Otherwise, if you want, you can only take the crash course of 100 hours. Last or not last, next, the full course is recommended for those who are learning for the first time. Because everything, all the questions, all the theory, everything, all the logic, everything is explained in detail. One big USP that I have over others, why my students get more exemptions than anybody else in the country, the main reason behind that is that we go into the depth of every provision, the detailed logic of every section, the history behind the provision, which we don't have enough time, because in crash course we have to cover the course in a lesser duration. We don't have that much time in the crash course. So we don't go into that much detail, and therefore full course is recommended for those who are learning for the first time. But if it is your second or third or any further attempt, then you can go for the crash course. So simply put, if you are learning for the first time, go for the full course. And if you have studied DT before, then you can go for the crash course. Amendments are going to be covered, whether full course or crash course, amendments will be covered. And amendment lectures, revision cum amendment lectures are also uploaded on YouTube. They are also very popular anyways. So you can take the revision cum amendment lectures from YouTube also. Anyways, full course and crash course are going to cover all your amendments. Now, as far as the important topics are covered, see, I have already told you that in full course, everything is in detail. So whether it is your important concepts or other concepts, whether it is the important chapters or the other chapters, everything in the full course is going to be covered in complete detail, total detail, minute detail, up to the bottom detail. Everything is going to be covered in detail in full course, because that is what it is meant for first timers who have no knowledge of direct tax. But in the crash course, the important concepts will be covered in detail. Now understand please, a chapter like profits and gains of business or profession, or a transfer pricing, or a chapter like TDS, these are chapters where there is not anything that we can cut. Selective studies anyway is not recommended, because you are studying for a professional exam and final level. So the important topics like PGBP, non-residents, your transfer pricing, your TDS, they will be covered in complete detail. In fact, what we are going to be doing is, we will go to our full course, open the folder of the important topics, cut those videos and paste it in the folder of the crash course. So these topics, you will directly get the full course recording. That recording will be properly arranged for you, chapter wise, part 1, part 2, part 3, everything will be arranged. Whatever has to be done in detail, it will be directly taken from the full course videos directly in detail. A chapter like PGBP, I will copy the folder of the full course and paste in the crash course. No cutting over there. A chapter like transfer pricing, maybe I'll copy and paste fully. In TDS, there are some sections which are not so important, so I might have to do something from the PDF. But in some chapters, complete full course folder will be copied for the crash course students also, because for important concepts, we cannot take any chance and everything will be in detail. And as far as the other concepts are concerned, as I told you, in full course, that will also be in detail. But in crash course, we will be doing it in briefly. Some of them, some we may skip also altogether things which are not important, and certain things we can be doing or we will be doing in brief from the PDF of our handwritten book Exemption 2.0. So as I told you, whether you take this study, without study material you anyways cannot study. Study material is highly recommended. Question and answer also is highly recommended. Ideal way to go for the crash course is crash with questions and with study material, and automatically you will get the set of 4 books. But in case you don't want to take the question answer, that's a matter of choice. We are giving you an option. If you ask my recommendation, you should take all 3. But if you want to exercise your discretion and you want to go only for the crash course, no question answer or no study material, still you will need the handwritten book for the crash course also. So at least that you will have to opt for. So basically that's about me, and that's the difference between the full course and the crash course that we are going to be doing as far as your CA final May and November 2022 exams are concerned. Of course, this was only to tell you the difference between them, and we are now going to go and learn this part of our course in detail. If I have to tell you more about the crash course, like the full course, the coverage is going to be of 43 chapters only, where 40 chapters will be covered in our textbook and 3 chapters we do from ICAI study material. The last 3 chapters, sorry, once again. The crash course, like also the full course, will also be covering 43 chapters, where 40 chapters we will be having in our textbook, and 3 chapters, the last 3 chapters of the crash course we will be doing from the ICAI study material. So we will be covering 43 chapters, but of course in this manner. So the less important topics will be done in brief. That is going to be the main difference between the full course and the crash course. Okay. And now that we are done with the introduction of the crash course, let us, without wasting any time, go to our first chapter, that is Introduction to Income Tax, first chapter of our portion, where majorly I am going to be covering only with you the tax rates that are applicable for your previous year 21-22, assessment year 22-23, which is applicable for your May and November 22 exams. Tax rates is what I am going to cover. Why do we need to cover tax rates in the very first chapter? The reason being that once we finish introduction and we go to the next chapter, double taxation relief, double taxation avoidance agreement, the first sum only will ask you calculate tax liability of the assessee. Once you are asked to calculate tax liability, you need to know the tax rates. And now, because we are continuing with the crash course, it is understood that you all are not learning for the first time. You all are learning for the second attempt or the third attempt. So you should be knowing there are 7 people who fall in the category of assessees, and everybody has to pay tax. Sabko tax dena. Everybody has to pay tax. Individual, HUF, firm, which will cover LLP also, company, AOP, BOI, local authority, artificial juridical person, all have to pay tax at the given rates, which we will be covering old rates as well as the new taxation regime, about which you have knowledge because you are learning for the second time, as I already discussed with you. Let's go assessee by assessee. First category, where we will learn tax rates of individual, HUF, AOP, BOI and artificial juridical person, where individuals will be divided into certain categories. Category A, a resident individual who is less than the age of 60 years, means anybody who is of the age 0 to 59 years will fall here, who is a resident individual. If you are a non-resident individual, irrespective of age, you are going to fall in this category, because the benefit of 60 years senior citizen and the benefit of 80 years super senior, very senior citizen, higher basic exemption limit, that is lower tax liability, is available only and only if you are a resident. Those benefits are not available if you are a non-resident, and thus resident individual will come here if he is less than 60, 0 to 59, but non-resident of any age will come here because non-resident will not go in senior citizen category. Other than that, a Hindu undivided family or an AOP BOI, example purposes I have taken the example of Lions Club because it is existing everywhere and this is something which people are aware of. And artificial juridical person, that's your chitti. Now if you are a South Indian student, you know it very well, and even North Indian students know who chitti is. Even if you have not seen the movie, you know who chitti is. He is not an individual because he is not a human being, natural person. He is not HUF, company firm, AOP, but chitti can also earn income. They will fall in artificial juridical person. So HUF, AOP, BOI, AJP, these rates are applicable. Individual less than 60 years, these rates are applicable. And non-resident any age, these rates are applicable. So separate rates are only for resident 60 years and resident 80 years, which are senior and very senior, that we will learn separately. Let's talk about what are the tax rates for all these people A, B and C. First 2,50,000 will be there. Basic slab rates, first 2,50,000 will be basic exemption limit. So no tax up to net taxable income, annual income of 250, no tax liability. After 2,50,000 till 5,00,000, there will be 5%. There is absolutely no change out here. And on the assumption that crash course students are learning for the second time, of course, you know what is the slab rate system. So first 2,50,000, 0%. Next 2,50,000, that means 250 to 5,00,000, 5%. Next 5,00,000, that is 5,00,000 to 10,00,000, 20%. And after 10,00,000, you will be having 30% tax liability. Your total income will be divided into slabs, small parts, and every part will be taxed. First 250, 0, next 250, 5%, next 5,00,000, 20, and balance at 30%. These are the slab rates for whom? Less than 60, resident individuals. Non-resident, any age, HUF, AOP, BOI, AJP. But if you are an individual who is exec 60 will be senior citizen. So here it is only going to be less than 60. If you are 59, you will come here. If you touch 60, exec 60 also, then you will fall here in senior citizen. And of course less than 80, because once you touch 80, you will go in the third category. Accordingly, you can say this is 60 to 79. This is 0 to 59. And exec 60 will fall in this category, exec 60, but only and only if you are resident, because as already said, non-resident will always come in the first category. If you are resident individual, then you will come here, resident senior citizen, resident 60 to 79 years at any time during the year, or as per CBDT circular. Even if you are becoming senior citizen on 1st April of your assessment year, you are still going to be considered as a senior citizen for that particular year, for that particular previous year. So resident 60 to 79, the only change being here the basic exemption was 250, here the basic exemption will increase to 3 lakh rupees. So first 3 lakh rupees will be their basic exemption. There will be absolutely no tax liability on first 3 lakh, and thereafter it remains same. Till 5 lakh it will be 5%, 5 lakh to 10 lakh same 5 lakh rupees at 20%. More than 10 lakh, anything after 10 lakh will be taxable at 30%. So rates are 0, 5, 20, 30, same, only difference being basic exemption will change from 250 to 3 lakh. Accordingly, 50,000 will be going in basic exemption from the 5% slab, and thus the tax savings here will be 50,000 into 5%, that is 2,500 rupees. That is going to be the difference between tax liability of the first category and the second category. And now we go to the third category, resident 80 years and above. So once again, if you are exact 80, you will fall here. So what are the three categories? 0 to 59, 60 to 79, and 80 and above. But the benefit of senior and very senior citizen will be available only if you are resident. Only if you are resident, you come in senior citizen. Only if you are resident, you come in super senior, very senior citizen. Once you are non-resident, you go in the first category, 250 basic exemption. But if you are a resident 80 years, then what is going to be your tax calculation? First 5 lakh rupees, there is not going to be any tax. So your basic exemption will increase. First category had 250, second category had 3 lakh, third category, the basic exemption limit will be 5 lakh rupees, means resident senior, super senior citizen do not have to pay any tax on income of up to rupees 5 lakh, but the story thereafter is going to remain same. From 5 lakh to 10 lakh, the rate will be 20% like everybody else, and after 10 lakh it will be 30. So they don't have 5% bracket. Why? Because their entire 5% bracket is gone in basic exemption limit, and accordingly the 5% tax is not applicable only to them. Directly 20% will be applicable after 5 lakh. All the rates that we have studied above, the first slab for the first category, this also covers HUF, AOP, BOI, AJP. The second category for senior citizens 60 to 79 only if resident. The third category for super senior citizen, that is 80 and above, once again only if resident. These are only the basic tax rates that will be applicable. Other than these slab rates, you should be aware as a student. Why you should be aware? If this was a full course, then I will never say you should be aware. I assume that full course students don't know anything and that much detail will go in. But because you are a crash course student, you should be aware that in income tax there is something called a chapter 12. Income tax is divided in chapters. Chapter 1 basic concepts, chapter 2 residential status, chapter 3 exempt income, chapter 4 heads of income, chapter 5 and 6 cover your clubbing and set off, chapter 6a covers your deductions, which you are all aware. So there is a chapter called chapter 12 which has given something called special rates. Certain incomes will not be taxed at these slabs or these slabs or these slabs, whichever is applicable. Which incomes? An income like casual winnings. Now this is probably something that you should be aware with your CA intermediate knowledge. Casual winnings, that's taxed at a flat rate of 30%. Long-term capital gains, taxed at 20%. If you are doing stock market trading, then even your short-term capital gain is taxed at special rate. There are some incomes which are not taxed at these slabs. They are taxed at a special rate which is given from section 110 to 115 BBG. So what you are required to do is calculate your net taxable total income as per the heads of income computation, segregate your NTTI. Certain incomes which are covered in chapter 12, they will be covered in special rates, and your other income, your normal income, will be covered at normal rates. You have to always split your income into normal, special, normal, special, normal, special, normal, special, normal rate, special rate, normal rate, special rate. You have to split your income into normal rate and special rate. Those incomes which are covered in chapter 12 will be covered in special rates. We have a separate chapter called special rates of tax. We will be covering that in that particular chapter. So these are your basic tax calculations. Slabs for first category, slabs for second category, slabs for third category, and the first category will also cover HUF, AOP, BOI and AJP. And if there is any special rate, it will be segregated and it will be applied. However, the bad news here is that these are only basic tax rates. This is not the final tax liability of any assessee. Once you compute the basic tax, you have to apply the following concepts. Concept called rebate, which I will do first. Concept called surcharge, which I will do second. And concept called cess, which I will do third. These three concepts will change your tax liability. Whatever you have calculated over here, supposingly you take any random amount of income, you apply these slabs, or if the category changes, these slabs, or for the third category, these slabs. But first, segregate the incomes. Segregate, apply special rate on special income, and on normal income, you apply whatever is the applicable slab. But with whatever you have calculated, the tax so derived is basic tax, and it will undergo changes. Following changes. Change number 1, under section 87A of Income Tax Act, we give you something called a rebate, that is, we will give you a reduction from your tax liability. So this is not an exemption or deduction. Exemption is subtracted from income. Exemption is not included. Deduction is first included in income, then deducted. But this will be reduced from, pay careful attention, reduced from your basic tax liability, for which there are 3 conditions. Condition 1, assessee has to be resident, or may I put it this way, non-residents will not get it. Condition 2, assessee has to be individual. That means HUF, AOP, BOI, company, firm, AJP will not get it. Only individual. And condition 3, your net taxable total income, ladies and gentlemen, not your tax liability. Your NTTI, your taxable income, has to be up to rupees 5 lakh. Focus please. Less than or equal to is also covered. Equal to is also covered means if my income is exact 5 lakh rupees, I am going to be eligible for rebate. Less than or equal to? Less than or equal. Just like exact 60 years, you are senior citizen if resident. Exact 80 years, you are super senior citizen if resident. Likewise, exact 5 lakh, you will be eligible for rebate. So, what are the 3 conditions to get rebate? Resident, individual, entity I up to 5 lakh. Exact 5 lakh also covered. And once you fulfill these conditions, your rebate will be actual tax or rupees 12,500, whichever is lower. Actual tax or 12,500, whichever is lower. So, if your actual tax is 12,500 or less, then it will fully become rebate. If your actual tax is higher than 12,500, which can be possible only if you have some special rate income with only normal slabs, it is not possible. You can work out the calculation with any amount of income up to 5 lakh. You will realize that if income is up to 5 lakh, the actual tax as per slabs can never be more than 12,500. Here it will be 0 only. Here it will be only maximum 10,000 till here it will be 12,500. It can never be more than 12,500. But if there is any special rate income, then your tax can be more than 12,500. So, your rebate will be actual tax or 12,500, whichever is lower. Actual tax or 12,500, whichever is lower. And people like my photo. Nobody can copy this PDF. There are people who copy everything, but nobody can copy this. This is for people like resident, because I have never gone abroad. Individual, because I am a human being, though I am a married man. So, I am not getting the treatment of a human being at home. I am treated like an animal. But for tax purposes, I am a human being. And by looking at my face, you can guess the income also. Of course, I am below basic exemption limit. So, this is for people like me. Okay. So, what are the 3 conditions? Jokes apart: resident, individual, income up to rupees 5 lakh. Resident, individual, income up to rupees 5 lakh, actual tax or 12,500, whichever is lower. Actual tax or 12,500, whichever is lower. But the next concept is surcharge. Now, can you see this gentleman? If not him, then whom? Surcharge. Surcharge is applicable for individual, HUF, AOP, BOI, AJP, everyone, in fact, company firm, everyone. Right now, we are learning tax of individual, HUF, AOP, BOI, AJP. So, we will confine ourselves, restrict ourselves to these assessees. Companies and firms tax rate we will be learning later and in some other chapter. So, we will not be wasting time in learning that part right now. Right now, our focus is not going to be companies and firms. Right now, our focus is going to be individual, HUF, AOP, BOI, AJP, everyone. Rebate is applicable only to individual, but surcharge is applicable to everyone. Rebate is applicable only to resident, but surcharge is applicable whether you are resident, non-resident, anyone. Surcharge is applicable to everyone, resident, non-resident, or individual, HUF, everyone. For rebate, you need conditions. Let us revise conditions of rebate. Resident, individual, income up to 5 lakh. Resident, individual, income up to 5 lakh. But for surcharge, the first 2 conditions do not exist. So, you can be resident or non-resident, anyone. You can be individual, HUF, AOP, BOI, AJP, anyone, and company firm also, but that we will learn later. We are right now focusing only on these assessments. Everybody has to pay surcharge. Rebate is for poor people, rebate is for poor people who have income up to 5 lakh will fall in rebate. But surcharge, you can zoom to see the face of this gentleman. Surcharge is for people like this gentleman, the owner of India. Surcharge will come if your income exceeds a certain threshold. Now, focus please. Exact 60 equal to 60, you are senior citizen. Equal to 80, you are super senior citizen. Equal to 5 lakh, you are eligible for rebate. If your income is exact 5 lakh, you are eligible for rebate. But in case of surcharge, pay attention. If your income exceeds rupees 50 lakh, means that exact 50 lakh, there will be no surcharge. Exact 50 lakh, there will be no surcharge. Greater than 50 lakh and 1 rupee, there will be surcharge of 10% till 1 crore rupees. If your income is more than 1 crore up to rupees 2 crore, see exact 1 crore, it will be 10%. But more than 1 crore, it will be 15%. Exact 2 crore, it will be 15%. But more than 2 crore, it will be 25%. Exact 5 crore, it will be 25. But more than 5 crore, it will be 37% surcharge. So, rebate will come at equal to 5 lakh. But surcharge will not come at equal to 50 lakh. Surcharge will come at greater than 50 lakh, 10%, up to 1 crore rupees. Greater than 1 crore, 15%, up to 2 crore rupees. Greater than 2 crore, 25%, up to 5 crore rupees. And greater than 5 crore, 37%. That is going to be your surcharge, and all these percentages, whichever category you fall under, that depends on your net taxable total income. Whichever category you fall, whether you are resident or non-resident, individual, HUF, AOP, BOI, anyone, when you are such a high income earning assessee, so you cannot just pay basic tax, you have to pay more. So look, for poor people, we are reducing the basic tax, but for rich people, we are increasing the basic tax in the form of surcharge. For me, the basic tax will be reduced, but for Mukesh Bhai, the basic tax will be increased because he is rich, I am poor. And what will be the increase? 10, 15, 25, 37 based on whichever category you are falling. However, couple of years ago, when 25 and 37 was introduced and there was a protest by high income earning category, then there was an ordinance released in 2019 where our finance minister, Mrs. Sitharaman, she said that this 25 and 37 will not be applicable to the following incomes. Short-term capital gain which is earned on stock market 111A, long-term capital gains which is earned on stock market 112A, capital gains which are earned by foreign institutional investors 115AD, and dividend income which till couple of years ago was exempt but now it is taxable because DDT has been abolished last year. These incomes will never have 25 and 37, means they will always have maximum 15% surcharge. Maximum surcharge that they will be having is going to be 15%. It will never be more than 15 for these income. First of all, if you observe, these sections are also part of chapter 12. Did I tell you the range of chapter 12? 110 to 115 BBG. These sections are a part of chapter 12. These sections are a part of chapter 12. So they are subjected to special rate, but the rates I will teach you at an appropriate time. 15% or 10% on excess over 1 lakh, or here there are different types of capital gains, STT paid, non-STT paid and all. Dividend income goes in normal rates. The thing is that normally the surcharge rates are going to be 10, 15, 25, 37 based on the category. More than 50 lakh 10%, more than 1 crore 15%, more than 2 crore 25% and more than 5 crore 37%. Normally these are going to be your surcharge rates. But 25 and 37, it is only about 25 and 37 will not be applicable to these incomes. 25 and 37 will not be applicable. If your NTTI is more than 2 crore or 5 crore, surcharge of 15% will be levied if your income is increasing because of these particular 4 incomes. And if your income has already exceeded 2 crore rupees or 5 crore rupees, then your other income will have 25 and 37. These incomes will still go in 15% surcharge. For those who have not understood, let me explain numerically to you. Let's take 2 examples and they will solve your problem altogether. Supposingly, let's take these 4 special incomes. Which 4 special incomes at least that you all are covered? Clear? 111A short-term capital gain, 112A long-term capital gain, FII capital gain 115AD and dividend income. These will be our 4 incomes where 25 and 37% surcharge is not applicable. So we will keep them separate. These surcharge rates are not applicable. Highest surcharge will be 15% for these incomes. Okay. And along with that, we will also be having our other incomes. So these incomes plus other incomes, that will be our total income, net taxable total income. Supposingly, our net taxable total income is 3 crore rupees. By looking at 3 crore rupees, what surcharge comes to your mind? What will be the applicable surcharge? More than 2 crore up to 5 crore. 25% should be surcharge. 25%. Ideally. But when we did some research, we realized that these 4 special incomes, that is 111A, 112A, FII, capital gain and dividend income, they are supposingly 2.5 crore. And these other incomes like salary, house property, PGBP, they are only 50 lakh. So that's our total income, 2.5 crore plus 50 lakh. That total is coming to 3 crore rupees. 3 crore rupees. By looking at 3 crore, your first decision will be 25% surcharge, because after 2 crore, 25%. But this is what I want to explain. Is your income crossing 2 crore because of these incomes? Go check. Supposingly, I remove these incomes from my computation. Then, what is the position? Is it more than 2 crore or less than 2 crore? Less than 2 crore? That means, listen to my statement. This important statement is going to make you understand what I am going to explain here. My entity I has exceeded 3 crore rupees only because of these incomes. I repeat, this is an important statement. If you understand this, you will understand everything. My entity I has exceeded 3 crore rupees only because of these incomes. If I remove these incomes, then my entity I is less than 2 crores. So consequently, what we will do is calculate tax on these incomes. First step is always going to be basic tax. Calculate basic tax, and on this total tax, there will be only 15% surcharge. 25 and 37 not applicable, even if this is more than 2 crores. Even if this is more than 2 crore, the entire tax liability, by the way, 10, 15, 25, 37, they are all applied on your basic tax liability. So this is your income. You can't apply surcharge on income. Calculate tax on this income, calculate tax on this income, and on the tax you will be applying 15% surcharge. Why 15? Why 25 and 37 not applicable? Because income has crossed 2 crores only because of this. If you remove this, then your income is less than 2 crore, and accordingly 25 and 37 will not be applicable. The reason why our income has crossed 2 crore is our 4 special incomes. That means 25 and 37 not applicable. But there is a second possibility. Okay. Supposingly, this income is 2.5 crore and this income is 3 crore or 6 crore. Anything. So what's your total? 8.5 crore. By looking at this 8.5 crore, what is the decision? Surcharge should be 37% once income is crossing. Mukesh bhai, once income is crossing 5 crore rupees, then surcharge has to be 37%. But before you apply 37, what did I tell you last time? 25 and 37 don't apply directly. First remove this. First remove these incomes. After you remove these incomes, what are you left with? 6 crore. That means, can I say, without the 4 special income, your normal income like salary, house, property, PGBP, that has already crossed 5 crore rupees. That means 37% will apply. So what will we do? Calculate tax on this. Calculate tax on this also, because surcharge comes on tax. Surcharge does not come on income. Surcharge comes on tax. And will 37% apply? Yes, but 37% will apply only on this tax. This tax will still have only 15% surcharge. These 4 special incomes, now you will be in a position to understand that 25 and 37 will not be applicable on these incomes ever. These 4, the surcharge will always be 15, 15, 15, 15, 15, 15, always. Acha, by the way, one more time I am saying this because this is important. I don't want you to go wrong. Surcharge is not applicable on income. Take the income, calculate tax. On the basic tax, we will be calculating surcharge. So surcharge on these tax liabilities will always be 15%. It will never be more than 15. On these liabilities, highest surcharge will be 15. It will never be 25, 37. Those surcharge rates are not going to be applicable. But our current understanding is about these incomes, the other incomes. What about them? Is 25 and 37 applicable on these incomes? Yes, very much applicable on these incomes. Absolutely applicable on these incomes. But Without these incomes, if your income is less than 2 crore, then here also we will apply 15%. I will speak two sentences and you will understand it. If my income crosses 2 crore only because of special incomes, if my income crosses 2 crores only because of the 4 special incomes, then there will be 15% surcharge altogether. 37 and 25 will not be applicable even on the other incomes. If my income crosses 2 crore only because of these 4 incomes, then entire thing will go in 15%, 25 and 37 will not be applicable at all. But if my income has already crossed 2 crore rupees, without the special incomes also I have crossed 2 crore rupees, then 25-37 will apply, but only on this. Here it is still going to be 15% surcharge. In conclusion, here it will always be 15% surcharge. And as far as these incomes are concerned, the other incomes, you see, without special incomes, if they have crossed 2 crore, then 25-37 will apply. But if they have crossed 2 crore with the special incomes, then only 15 will be applicable. That's the discussion as far as the 25% and the 37% surcharge is concerned. And now that the discussion on 25 and 37% surcharge is over, we go to the last part under the concept of surcharge, the concept called marginal relief from surcharge, which will be applicable to all assessees. If your income exceeds the surcharge threshold just by a little, a marginal increase, then one sentence is going to explain the concept. The increase in tax cannot be more than the increase in income. The increase in tax cannot be more than the increase in income. Let me explain with the help of a numerical example, then explanation only will not be required. We will compare two people. Somebody who has got income of exact 1 crore. Exact 1 crore means, can we say 10% surcharge, because more than 50 lakh up to 1 crore 10% is applicable. And somebody who has got income of 1 crore and 5,000, that means only 5,000 more, but surcharge will become 15, no, because more than 1 crore. So this is equal to 1 crore, thus 10% surcharge, and this is more than 1 crore, so 15% surcharge. First, let's calculate the basic tax. You may apply the slabs that I have already taught you. So basic tax will be 28,12,500 as per the normal slabs of we are assuming less than 60 years. But here it will be 28,14,000. Why this difference? If you observe the difference here, the difference here is also 1,500. Why? Because what is the difference in income? 5,000. Obviously, assessee is in 30% bracket. So that 5,000 will be taxable at 30%. So that will be 1,500 rupees, and that's the difference. Basic tax here is 28,12,500 and basic tax here is 28,14. The difference is very clearly visible. Increase in income is 5,000 and taxable at 30%. Accordingly, 1,500 rupees is the difference between the two basic tax liabilities. But now will come the main difference. Here we will apply surcharge at 10. Sir, why 10? Because equal to 1 crore. Here we will apply surcharge at 15. Sir, why 15? Because income is more than 1 crore. Accordingly, this will be 10%, this will be 15%, and we will get our tax, basic tax plus surcharge. Now, if you observe carefully, the difference between these two liabilities is 142,350. You can do it on your calculator. The income of this second assessee has increased only by 5,000. Change in income is only 5,000, only 5,000, only 5,000. But the change in tax liability is 142,350. How can this be? What logic is this? Means if this assessee conceals only 5,000 of his income, does not disclose income, his tax will reduce by 142,350. Or let me put it this way. If I have income of exact 1 crore, this is my tax. If I have got income of 5,000 more, this is my tax. Means if my income has increased by 5,000, my tax is increasing by 142,350. Illogical. And thus what we will do? Simple, one line. The increase in tax cannot exceed more than the increase in income. This is the line. The increase in tax cannot exceed the increase in income. What is the increase in income? 5,000, 5,000, 5,000. The tax will also increase maximum by that much. Increase in tax cannot be more than the increase in income. But we have already included this much. So what we will do is, if this is 30,93,750, this will be 30,98,750. The difference will be maximum 5,000 rupees. Where did I get this 5,000? Whatever is the difference in income, that will be the difference in tax, maximum. So from 30 to 36,100, if we have to keep only 30,98,750, so this much will get subtracted, and this is called your marginal relief. In one line, the increase in tax cannot be more than the increase in income, and if that is the case, we reduce some amount, and that reduction is called marginal relief. And with this, the concept of surcharge is over, and we now have the last concept, that is HEC, health and education cess. Best part about this is there is no condition. This will always be applicable. Always applicable means whether you are resident or non-resident, individual, HUF, always any tax you calculate anywhere under income tax. In fact, other taxes like DDT, DDT is abolished. So buyback tax, there is something called exit tax under charitable trust. Any kind of tax you calculate, 4% cess will always be applicable. Calculate your basic tax first step. Give rebate if applicable. Give surcharge is applicable. See, rebate has conditions. Resident, individual, income up to 5 lakhs. So it won't come always. So we have mentioned if applicable. Surcharge has got condition. Resident, non-resident all covered. Individual, HUF all covered. But there is still condition of income crossing 50 lakhs now. If income does not cross 50 lakhs, income is 30, 40, 45 lakhs. So no surcharge. So if any. And one more thing, you should have common sense, that rebate and surcharge can never come together. Because rebate comes at less than 5 lakh and surcharge comes at more than 50 lakh. So they can never come together. It will be always one of them. Calculate everything. Do all those steps. Do your basic tax. Do your rebate. Do your surcharge. Do everything. And on that amount, you will apply 4%. 4% will be your cess. So if your tax is coming to 100, you actually have to pay 104. If it is coming to 200, you have to actually pay 208. 4% will be your increase in tax liability, and that is called cess. Best part being no condition, one word, always. Irrespective of who you are, what you are, low income, high income, anyone, 4% is going to be your cess. And this is calculation of tax of individual, HUF, AOP, BOI, AJP under the old taxation regime. The new taxation regime, we will be taking the video from our full course lecture because we want to do that in complete detail, total detail. So this new taxation regime, I am not discussing right now. I will finish the old regime for the other assessees also. By the way, my discussion is over because the other assessees we are covering in other chapters. But this new taxation regime, where they are giving you an option, those who have seen this web series, Mirzapur, this is a gentleman called Rati Shankar Shukla. He gave an option to Munna Bhaiya and Munna Bhaiya nahi, Guddu Bhaiya. It's okay, forget it. Let's not discuss web series in the lecture. These are only to entertain you while you are learning your these memes are only to entertain you while you are learning your chapters. The intention is to focus on the subject. Nowhere these memes should take away your focus from the subject. This is only to keep the atmosphere light-hearted because you are already learning a very complicated subject. And my task is to make it easy, entertaining and interesting for you. But we cannot go away from concepts and logics. Prime focus is going to be always on that much. So new regime will be discussed separately in a detailed video taken from the full course. All these things are going to get covered over there in that course. I'll just do with you the old regime of cooperative society, because in the next video the new regime will be covered. The slabs of cooperative society are a little different. Basic tax will be first 10,000 10%, 10,000 to 20,000 you have got 20%, and more than 20,000 30%. Very simple slab. First 10,000 10%, 10 to 20 20%, and more than 20 30%. Very simple. Rebate will not come. Sir, why rebate will not come? Because rebate comes only for individuals. Already told you condition. Rebate will not come. Surcharge will come. Now pay attention. Pay attention. The surcharge rates of different assessees are different. So what I taught you earlier, 10, 15, 25, 37, that is applicable for individual, HUF, AOP, BOI, AJP. Rebate is not applicable to the other assessees, so no discussion, but surcharge is applicable to all assessees. It is applicable to cooperative society, it is applicable to company, firm, LLP, everyone. The rates are different. For individual HUF, AOP, BOI, surcharge started after 50 lakh rupees, 10%. But here, in fact, firms, companies, everywhere, surcharge starts after 1 crore. If your net taxable total income exceeds rupees 1 crore, only one rate of surcharge. No 10, 15, 25, 37, nothing. Only one rate. 12% surcharge if income exceeds 1 crore. So if income is 0 to 1 crore, no surcharge. More than 1 crore till 100 crore, 1000 crore, anything, 1 surcharge rate, 12%, and rebate is not there. And HEC, as I already told you, always, even if you have a brain, preserve it for a later stage. Brain not required. HEC will come always, 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 without any exception. 4% always. So surcharge and rebate, we have conditions. HEC, no condition. And this is the old regime of cooperative society. So just like we have 115 BAC for individual HUF, we have got 115 BAD for cooperative society in the form of new taxation regime, and the new taxation regime will be discussed in part 2 of the lecture taken from the full course, because I want to do this part in detail, complete detail. Okay, so that's your old regime of these assessees. And as far as now the remaining assessees are concerned, the remaining assessees are partnership firm, LLP, local authority. Their income tax rates are same. Just to give you a knowledge, they don't have slab rates, they have flat rates, flat rate of 30% basic tax. Special rates will apply. Special rates will apply to them also. Special rates will apply to cooperative society also if there is any income taxable under chapter 12. Anything taxable under chapter 12 will always be applicable. Special rate will always apply. Segregate your income, normal rate, special income, special rate. That will always apply. Likewise, in companies and firms also special rate will apply. Normal income will be taxable at flat rate of 30%. But for partnership firm, we have a chapter 11 of our textbook, assessment of firms. And for companies, we have a chapter number 15, minimum alternate tax, one of the most important topics. So these two topics will be covered in detail. And as far as the rates of firms, there is only old regime, there is no new regime. We will be discussing in firms chapter. And as far as companies are concerned, there is old as well as new regime. We will discuss that also in MAT chapter. But right now we are not covering the tax rates of firms and companies. That will be covered in the respective chapters, firms in chapter 11 and companies in chapter 15. This is the old taxation regime, the existing tax rates which were being followed for so many years. With this, we get done with the first part of the lecture, and we now move on to the new taxation regime, which will be, as I told you, I have told you in the introduction itself that certain concepts need to be taught in detail. Those videos will be directly taken from the full course lectures. We hereby declare our first part of the crash course as over. Thank you very much.